Good morning and welcome to the Trading the Tech show for Thursday, September 24th, 2020. So we missed a couple of days for the show, so I'm happy to be back on now. Um, just different issues with the internet and other types of issues just kind of were getting in the way. Uh, but it's good to be back. I'm glad that the week is progressing quite well for our traders. We solved a lot of issues this week. A lot of the automated trading software issues have been resolved. Features added, different management features, things like that, and um, looking to add one more thing, like a security type feature. But other than that, things are running. I don't know if I mentioned it on this show, but I think I mentioned it on the daily market overview show um, that I've developed two more actual automated trader systems. So, we've got two that we're kind of testing out now. One is a platinum edition, one is a vibranium edition. And we'll see, so far they look very, very promising. Very good performance from both. Hopefully we'll get to roll those out, those couple different options out as well, so that people have some choices. And if they want to run them all for different types of trading, they can do that for, that's pretty cool. We encourage you to have more accounts, of course, as our business grows. We want people to take advantage of all of the opportunities that we have. So, like I said, I'm glad to be back. We're going to jump right in and start taking a look at some of the charts here, just try to get through all of the pairs since we haven't been on this week. We did some in depth on the daily market overview show. Yesterday morning, I wasn't able to do it this morning due to the internet, but today we will go through these charts again and just kind of see kind of where we've progressed to since our last show. Now, this is the Aussie CAD. I'm running this on a 30-minute chart. That is because I'm running my auto trader on a 30-minute chart as well. As you can see here, one of the ones I'm testing is the platinum auto trader on this particular system. So we are testing for that now. So I will leave it here on this particular time frame, but this is a great time frame. I'm not one who used to trade the 30-minute time frame a lot. I always kind of gravitated towards like maybe the 5-minute or 15-minute, and then higher time frame like the hour, 4 hour, but kind of always ignored the 30-minute. But throughout my testing on some of the auto traders, I've been finding some good results with the 30-minute chart. And it may be just because of the way the strategies were set up, that they're yielding decently on the 30-minute chart. There's a lot that kind of goes into it because the distance that you get, the traveling distance for the rate is a little bit different as you change the charts. And then with the nature of the market, especially in maybe a little bit choppy market, maybe a ranging market, you might want to be somewhere around in that 30-minute chart. I'm learning just because of the distance it travels before it turns around is not so great, but at the same time, it's it can give you enough pips to be interested in the trade. So this is why I'm choosing the 30-minute chart. Now, as we discussed on my other show, I'll kind of give you an overview of what you see on the chart here. It looks like a bunch of lines. They all have meaning. This is a 720 moving average. This is a 200 moving average. This is a 100 period moving average. This is our 50. This is our 21, and this is our 8. As they get lower, they get closer, of course, to the rate and to the candles. So there's a lot of patterns and things that you can see once you start to put the moving averages on your chart. I don't need you necessarily to have all of these on your chart. It was just necessity for me to be able to program certain things with the auto trader. So I'm really kind of getting into that. I really kind of like programming it, and now that I have kind of like a foundation, it's actually working out well. It's not so hard to program other things. It's just keeping everything together, making sure it compiles nice. But on this Aussie CAD, we see that these moving averages are in order as far as the period size, to the downside, right? So if they're all in order like this and it starts to get wide like this, that tells me that I'm in a downtrend for sure. That tells me that the trend is wide open here. I think we'll be moving that direction for at least a little while. That's going to be the overall direction that we're going. So for me, it might behoove me to trade in that direction. Now there's strategies that are, for turnarounds here. We're kind of trying to pick the bottom and turn around. That's a strategy that is employed by the diamond auto trader. So that's a little bit different strategy. It takes this trade and says, okay, well, we're this far away. So maybe it's time that this is going to slow down. And then we start to get a trade in the opposite direction. So if I'm trading though manually, I'm going to trade this to the downside. There's no reason for me to really trade this, trade it to the upside at this point in time. I'm under my 720. So this 720 out here is like a longer term period average that's going to be a lot smoother than the others, right? The 200 and the 100 are pretty smooth, but the 720 is a really smooth moving average. It's really far out. So once you cross that, you're pretty sure about rate, the rate and direction. You're pretty sure about trend. So as we look at this, it's very simple to see whether or not these, you have a good trend going on one direction or another. It's very, very quick. So I like this particular setup, and this allows me to see what's going on very, very quickly. If I'm looking at a trade for this, I'm looking for a pullback, maybe into the moving averages, maybe beyond the 50, maybe even beyond the 100. The more I get beyond, the 50, the 100, if I even cross the 200, the more opportunity I have for this to continue to fall. Now, if the moving average start jumping over one another again and look like they're changing to the upside, then, that's a point where we might think about, getting out of our trade if we've been riding this trend a little bit. But most of the time, trend continues. So it's going to continue for a while before traders go, okay, this is not the, this maybe is a little too far for us. And so let's kind of, pull back on it. So when I'm looking at this and I see wide open trend, that presents opportunity for me, especially on any type of, like, if we see these consolidations, especially early in that trend that way, this is a sign that we probably can get in here and make some pips. Looking at the Aussie yen, you can see it here. We have the same thing. We are in full trend here. We've been in the trend for quite a bit here, this trend down, but it's been a wide open trend for, I guess the 8 is jumping over the 21. That's to be expected a little bit as the rate bounces. But you can see sometimes here it bounces all the way up to the 50, and then it falls again and bounces to the 50 and falls again. So, depending on particular pair, the particular pair, maybe you want to play that. If you see that as the pattern, then maybe you say, okay, maybe this is something I want to play as a pattern. And you just, it's cool because the moving average really shouldn't move. It should actually stay where it is. So it shouldn't really even repaint. It should just add more to the end. And then, so you can go back and look and say, I got in here because it crossed the 50 and I felt like it was good, it's open trend still. But it did cross the 50, so it's still headed down. And that's the reason why I got in on the 50. So for the Aussie yen, definitely trade to the downside because it is, headed down. Now you look at this Aussie New Zealand, we kind of had a big trend, a wide open trend way back here. This is the 17th and 18th of September. And then, somewhere in the 18th, we started pulling back against that trend, right? We got over here above even the 200. We had the moving averages kind of crossing over, and then we dropped back in and we created a new low over here. This was on the 22nd. So a couple of days ago, we created a new low. So when we're underneath this 720, my idea is that the trades that I typically want to take or that I think will run longer or have more potential will be short trades, ones that are falling, right? If we're above it, then I think that long trades are going to be better. Right now, looks like we are opening up into trend here. I feel like this might have been a great trade if you take this, say, on the 50, you're crossing over the 50, and then you're taking the short. Now we do, I talked about catapult too. So this is possibly something that we would look at as a catapult trade. Now talk about what the catapult trade is. I'm gonna make this a little bit wider for you. Typically we would do this on a bigger chart, on a bigger chart time frame. We used to use the 90-minute chart time frame, but it can work on other time frames as well. I'm going to show you how we used to look at this particular trade. It was a very, very popular strategy for us. Our students learned very quickly that this can put pips in your pocket, and they felt like this is a very good strategy for them. So our blue line here is going to be our 50 moving average. So what we look for is a straddle of the 50. Nothing else counts, okay? So what counts for us is when we have the open above the 50 for a bearish candle and the close below the 50. So the candle is straddling, you can see the 50 passing right through it. Doesn't have to be in the middle or anything like that, as long as there's body on both sides of the 50, right? Then we don't do anything on that candle. We wait for the next candle. We look at the next candle and say, did the next candle close red or green? Did we close a bearish candle or a bullish candle? This is a bearish candle. So with this bearish candle, what we would do is say, okay, so what's the close on this candle? If I put my mouse on it, I can see the close was 107.97. So then my short is 10 pips below that. My short would be at 107.9 or 107.82, right? So because it was 107.9, oh no, I'm sorry about that. I got lost there in the math. I saw the low and gave you the wrong number. The close was 107.97, so 107.87 is our entry. It's more like it, right? So I'm gonna go ahead and just drop a line in here. We're gonna just put it in there. Oh, this red is not so great on this background. Let's see if I can change this a little bit. I'm gonna change it maybe to a white or something, maybe something we can see a little better. Okay, now we can see the number a little bit better here on the right. So 107.97, I'm just gonna grab this and I'm gonna slide it down to 107.87, I'm sorry. Let's go here. It's like 879 or something like that. So this is the point where I would be interested in entering the trade. 10 pips below the second candle that closes underneath the 50. It must close underneath the 50. Can't be straddling back or anything like that. We don't take it again. So we would set our order here on 10 pips below, and then our stop loss is going to be up here, maybe beyond the 200, something like that. We would set our stop loss up higher if we're going to set a stop loss. We do have a peak here that we could set our stop loss beyond. That gives us a lot of space for this to move. You can see that we did jump up here. We actually eclipsed the 50 again, way up here above 108, but then we fell right back down, and we actually end up closing way down here below. So this one, it bounced around, it ended around for us, and finally came back down here, and then got into kind of positive territory again. We see that we have trend kind of opening up here. So this might, have been the trade that we take to the downside. We would just set it up, set our order out front, have the market pick us up. Now we would have got picked up probably here on this next trade, right? One of these two trades probably would have picked us up and dropped us into the trade. We had to wait for it a little bit, been a little bit patient. How many candles do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles. So we're talking about 6 hours. So because each candle is a half an hour, right? So we're talking about 6 hours being in this trade, but we didn't get too far away from the entry. It's kind of cool. We're still within a few pips of the entry. And then, we have the opportunity for this maybe to go positive for us. So that's how this catapult trade works. You need a straddle candle. The next candle needs to be the same color and close above or below the 50, depending on whether it's a bullish or bearish trade. And then when we get the close, we place our order, we place a pending order 10 pips below or 10 pips above, depending on whether we're buying or selling. If we're selling, we place it 10 pips below. And when we place that order 10 pips below, we wait for the market to pick us up and kind of continue on with us. And so on those 90-minute charts and things like that, we had people that would do like 300-400 pips and like they were just ecstatic. So that's a new strategy. So as I see that kind of pop up and maybe an opportunity for those, I'll start to, prime you guys on those too, because we've got some other strategies, but that's, one of the big ones that I want to bring out to you and let you guys see. As far as the Aussie US, we see that we have a wide open trend again. So this is kind of the recurring theme through all of the Aussie pairs, is this wide open trend to the downside. So if we're taking trades, we want to be taking trades short. On the CAD yen, we were in this big downtrend here, but then we got a little bit confused on what's going on here. It kind of bounced up against trend, did come back down for us. And then since then, we've kind of been trading off to the right. You can see that our 200 is real flat. Our 300 is kind of flat in here. The other ones are moving around, of course, but our 100 and our 200 are really flat. Our 720 is not even really in the picture here right now, but the others were kind of flat. But if you look at the end here, look what's happening. We're starting to go into trend again, right? So maybe this move to the downside is going to continue at this point in time. We've had some real moves to the downside here and here. So that tells me that there are people that are willing to sell, are traders out there that are willing to sell. And if we're going to come down here, we need to break, there's kind of some support that we met here. There's some support we met here. If we can break those, then we can have a nice trade to the downside. Now, our automated trader at one point did put us in a sell trade a little bit low here. Not sure why we were in so low. I think that went on today or something. I don't remember, but maybe the spread was wide or something late this evening. We got caught up in it or something. I don't know what exactly happened there, but we do have a short trade triggered by the Platinum Auto Trader. Let's look at the Swiss yen. Looking at the Swiss yen, you can see that the moving averages are not in trend here, right? We've kind of broken our trend. Our 21 is over our 50, our 8 is over the 100 already. So these three are definitely in order to the upside, while the 200 and 100 are in order to the downside. Our 720 is way up here, right? So we kind of got a mixed bag right now. You can tell that there's a lot of consolidation happening here, but overall, the overall trend has been to the downside. So if I'm going to place a trade, I'm probably going to look at something to the downside. If I place anything, maybe I'll right click and place a trade here on the end of this 50. So if you cross back over the 50 and head down, then I'm interested. I might play a catapult trade off that. Could do that as well too. But I've got that short going on. I don't really see that as a move to the upside. Looking at the Euro Aussie, very simple to see. We're definitely in a super uptrend here now. So we're going to watch and see how this exhausts or not. Right now, we're not too far away from our moving average, our 50 moving average, right? So we talked about this too in some of the other shows, where if we have this 50 moving average, typically at the end of the run, we get a pop away from the 50, and then we tend to trade back to it. So I don't know how much it'll pop here, but that's something that we typically see when we see these big trends. We see the big run up, then we see a pop away from the 50, and then we see that elastic pull back to the 50, right? But right now we're in open trend to the upside. So my idea on this is that's going to continue to the upside. If we're pulling back against the trend, then those are opportunities for you to get in and get some pips. On the Euro CAD, you can see that we're out of order here. We've got our 720 out here. We've got our 100 and our 200 kind of in, the 100s in the middle, and our, 50, 21, and 8 are in order to the upside. So this is all just combobulated right now. My feelings that it's probably going to continue to the upside now. So what really would have been at play, and I think we wrote this up the other day, was going to be our high to our low here on a Fibonacci retracement. That was probably the trade that we were going to be able to take. Looking at the Euro Swiss, This one's all discombobulated here too. Kind of in the middle of a range here. I'm going to go ahead and throw on a couple lines. Yeah, we'll leave it in white. This is easy to see. So if we look at those two lines, our trades typically have happened between those two lines, right? So I'm looking at this trading to the right. So if I'm trading this, I'm looking at maybe a short from the resistance level here at this 107.48. It's not real accurate. I just kind of drew it in there just so that you guys can see, you know, the channel that it's in, and that it's just trading to the right. So we broke out a little bit here, but we fell right back into the channel. So this line, if we sell on this line here, this horizontal line, that might be a spot for us to make some pips. Or if we buy on this line, we might get some pips too. Or we get close to it, we think, you know what, maybe if it's slowing down, maybe I'm gonna get some picks, you know, some pips out of it. So that's what I would play on the Euro Swiss. On the Euro Pound, looking at this is discombobulated too. Not a whole lot there, you know, that makes me happy. If I'm gonna play anything, I'm probably gonna play this peak to this low for Fibonacci retracement to the upside. Reason for that, because we're above this 720. So I put on my Fibonacci retracement, hit my Fibonacci here, draw from this top to this bottom. And as you can see already, we hit our 23.6 over here, bounced around a little bit, but we did hit our 38.2 and we're sitting there now. Our target is going to be the 50 and the 61.8. And maybe higher because we are above the 720. Okay. Euro yen, not quite in trend here. We're definitely, you know, discombobulated between the 50, the 21, and the 8. But we're trading off to the right. You can see that this is consolidating to the right here. Hasn't really shown any penchant to the upside. I see that we were in a big trend here to the downside. So I'm looking at this as an opportunity to short. Once this breaks, maybe we get another leg down. So that's what I see on the euro yen. Now be careful with the yen pairs because you know how they are. You know, they're a lot more volatile sometimes too. So once that money starts, you know, flowing into the yen, then, you know, these pairs will fall. But, you know, if people want to take risk and they want to kind of get their money out of the safe haven currency, which is the yen, then it tends to move really, really strongly out of those levels. On the Euro New Zealand, you can see that we almost have trend here. We've got our 200 just about to jump over our 720. So that's telling us that we are in a full trend to the upside. I'd be looking for any type of pullbacks to take, you know, trades to the upside. If you look here, we had this trend to the upside here. We got this big spike down, but then we had the opportunity to maybe jump in on this 50 and then keep it moving. I don't really have a catapult here. This is not technically a catapult. I'm going to show you something here. We had this green candle here that straddled, but our next candle was red. So that typically cuts our trade for us. That cuts our analysis for catapult. So I want to show you that. So we don't say, okay, oh, the next candle was red, so let me take this other green one. No, we look for the next candle to be green as well. So if it's not, we walk away. So, but, you know, there's other opportunities because if we see this pullback against, you know, against the trend to the upside, then we can buy into this at these different levels. If you want to go on the 50, that's great. If you wanted to come, if you're waiting for it to bounce down to about the 100 or 200, that's great because we could have got into those trades a couple of times, all of those. But then once we get above this 8, once we get the rate above the 8 and it's riding it, it's going to ride it all the way up. It's really the 8. I mean, the rate is actually creating the 8 EMA, but you know, at the same time, you can just visually see what's occurring. So, you know, I like this particular setup too. This one is a short. So this is Euro US, and we're headed down here. We can see we have wide open trend according to our moving averages. And then we can see that we've popped up a couple of times, touched the 50. We touched the 50 here, we touched the 50 here, and we're almost touched the 50 here. And each time we've kind of fallen away. So that's how I'd maybe play this. We've had like these flattening, areas where it kind of flattens out a little bit here. We've had several of those. So I'm not going to be real afraid of this because that's kind of what we've been doing. We've been flattening out, consolidating, and then moving down. So I'd be short on the Euro US. Now, looking at the pound Aussie, we have what's looking like trend setting up. And then once the 200 jumps over that 720, then we definitely know it. So we're going to see if we're going to pull away from the 50 here. And then if we pull too far away, then we're going to snap back towards the 50 at some point. And then we'd have an opportunity to buy into the trend to the upside. As far as the pound CAD, it's a little discombobulated right now. We're underneath the 720. So my mind frame is really on the short, maybe short trades. So what I see here is maybe a possible breakout bounce to the downside. So we bounced here, we created a high, we're coming around and we're going to test whether this high is going to be our resistance point or not. So that's kind of what we're looking for. When it comes up, does it break this level here that it stopped at before? Does it break the high? And if it does not, our expectation that it's going to continue down. It's going to, reverse and go the other way if it can't break that. And we're underneath the 720. So if I'm looking at that, I'm playing to the downside. Or I'm going to play the Fibonacci retracement. So I can play that a couple ways. So the Fibonacci retracement here, we've got the 23.6, and then we've got the 38.2, and then with 50 and our 61.8 as our targets. Right. So we may be able to get this. We may be able to get this to set up for, this Fibonacci retracement. We're above the 23.6. So this might be something I'm interested in, especially if we really create a little bit of a leg up here to try to test. We may not. So, depend on how aggressive you want to be and what type of trader you are. If you decide that you want to take this 23.6 and make that your pending order, to the downside, then you can do that. On the pound Swiss, we see that we're a little discombobulated here for the moving averages, but we are once again underneath the 720. The only play I really see here is from this low to this high, a Fibonacci retracement. And even that is too late at this point in time. We're sitting on the 50 already. So we hit the 23.6, the 38.2, and now we're sitting on the 50. So I think it's still, if we're in that, we wait till it hits the 61.8 and move to break even at least. This one I'd probably break even because we're going to be in trend to the downside at some point. Pound yen, we see that we had this nice trend, kind of like the other pounds to the downside. We end up getting this consolidation and then this bounce back through the moving averages. So looking at this right now, we see our 720s way up here, just kind of peeking out of the top here. So if I'm looking at this, I'm going to be looking at a trade to the downside. Now you have to be careful because these are tricky sometimes, especially something like the pound yen. All the yen pairs are going to be a little bit tricky. So I just watch them. If you can break even early, break even a little early on them. If they're going to run away, great. They're going to run away. But if not, and they come back and we make a few pips out of it, you know what? Take your pips and run. Don't be greedy. All right. That's the best thing I could tell you. As far as the pound US, same thing. But this one is actually in trend. We've got our 8, 21, and 50 looking good down here. And then the others are certainly in trend. We can already see that. We got some bounces back to the 100 here that actually worked out for some short trades, right? So looking at this now, we're below the 8. So I'm probably won't be something I'm going to trade now. What I would watch for is a breakout bounce. So if we break out of if we bounce here and we don't come back down and test this area too strongly, then maybe we go off to the upside. But right now we've got this trend to the downside. I'm looking for opportunities that put me in on a move downward, right? We might have missed it already because we had this move up to the 100 and it's headed down already. But keep your eyes open for it. You never know. The market is very forgiving. It's kind of moving around and forgiving. So it might give you an opportunity again. On the New Zealand CAD, you look at this. We've got a trend developing to the downside. We just want our 200 really to kind of pop over our 720. Almost, really though, I would say because the 200, 150, and 21 and 8 are all in order, I would say we were in trend. We're definitely in trend. The 720 is just something that I use as a gauge for just something a smoother moving average way out that, won't fluctuate as much with the rate. Its angling won't be so strong. And it kind of give you an idea like, okay, if I'm above this, then maybe I'm headed up. If I'm below it, then obviously maybe I'm headed down, you know? So for this, I'd be looking for pullbacks against the trend and trying to short. New Zealand Swiss, same thing. We jumped over the 200, jumped over the 720. We've got full trend to the downside. I'd be looking for any pullbacks to the 50, maybe to the 100, and then shorten. New Zealand Yen, same story. All right, see that? New Zealand US, same story. So this is kind of cool. So, you got like 1, 2, 3, 4 pairs that are all kind of headed the same direction, all almost have the same setup, and all of them, may provide you the same opportunity. So, if you see it, I would caution you just a little bit, kind of pick which one you're going to do, or which one sets up, and then maybe stick with that one. Because sometimes if we're placing orders on, multiple orders on the same pairs, then it's in the same family of pairs basically, or they're all New Zealand, so you really can accomplish the same thing with one trade. You don't have to pile on and do 4 trades, but it's really up to you and what kind of trader you are. Me, I trade whatever the auto trader gives me. So if it takes all 4 trades, it takes all 4 trades. I don't care. I love it. So now on the US dollar CAD, we've been seeing some dollar strength recently, so this is continuing. We got this nice open trend here, then we got consolidation, and boom, we got another leg up. So we're going to be watching this to see if it pops away from the 50, and then maybe that's our reversal signal. But other than that, we're headed to the upside. I'll be looking for pullbacks and then push to the upside. It is the dollar, so I just worry about, or remember that the dollar has been getting crushed lately. So, it was down, at some serious lows. So I'd be mindful of that. But at the same time, when I've got my trend, I've got trend. It's telling me we're headed to the upside. I'm not going to fight that. US dollar Swiss, here's the same thing. But you look at the patterning in it, look how it pushes away from the 50. And then it kind of comes back to it, right? Pushed away from the 50 and kind of comes back. Here, pushed away from the 50 and starts to head back. So once you catch those peaks out there, sometimes you can get some nice trades to the downside. So that's what I think the Platinum software kind of does for us, right? No, the Vibranium Auto Trader. That's what that's kind of designed to do. So I got to do more testing on it, but so far so good. It looks great. As far as the US dollar yen, we are headed to the upside. We pretty much have trend to the upside. We just haven't jumped over the 720 yet. So that's my only fear with that particular one. So, if I'm playing this, I'd be cautious maybe playing it to the upside, but we've jumped over the 720 as far as the rate. So we'll see if it keeps going. So, trend is everything. It's all about direction. If you can figure out what direction you're going in, you can gain pips. It isn't always easy, but you have the opportunity to gain pips when you do that, when you look at it that way. So use your moving averages. You don't need to draw a lot of lines, and you don't have to guess at what's going on. You can draw on your moving averages, know what the colors are, just color code them according to what you want. And then just so that something you'd remember. And after time, you're just going to remember by looking at it. Oh, I know what this is. I know this is my 200. I know this is my 100. I know this is my 50. I know just because I've been using them for years that way. So you'll set that up for yourself, and you'll be able to trade. And it works, manually. If you're trading manually, you can see what's going on, and you can create your trade and be able to walk back through it and understand why you entered your trade. So I'm glad you guys were able to hang out with me today. I'm going to end our show there. Hopefully you got some good trading ideas out of this show, and you can get to your charts now and spend some time kind of analyzing some things and figuring out what's the best opportunity for you to make some pips today. All right. Thanks a lot. I thank you for hanging out with me. Tell your friends about this service, and remember, there is a referral program that you guys can join, or that, once you become subscribers, you're actually already joined to it. So you earn a little piece of whatever this subscription they sign up for, whatever service they come on board with, you earn a little piece of that. So just as a reward for bringing people our way. Once again, my name is Derek. It has been fun. Thanks a lot for tuning in, and I will see you hopefully, well, not tomorrow. Well, what's today? Well, today's Thursday, but it'll be Thursday night. So we'll do tomorrow's show Thursday night. We won't do Friday. All right. All righty. We'll talk to you soon. Have a great day. Bye.